So this is the third episode of the Forex Success Blueprint. In case you've not watched the first and second episode, you can go to the channel and watch them. In this particular episode, I'll be focusing on the concept of time frame and we'll also discuss the different types of traders we have in the Forex industry. You must have been told that we have 4 types of traders in this Forex industry: the scalper, the day trader, the swing trader, and the position traders. Don't forget that the type of trader you are will determine the time frame where you operate in the chart. Every trader must have 2 types of time frame: your entry time frame and your analysis time frame. Right? And the time frame where you make your entry and your analysis will also be determined by the type of trader you are. You know exactly what to do. Just watch this video to the end so that you get more information and more clarification on the concept of time frame and the different types of traders we have. And if you find the information I shared in this video valuable, don't forget to like the video, subscribe to my channel, and hit the bell notification icon so that I'll be notified when I release the next episode, which is episode 4. So we had 2 classes, and these 2 classes are already recorded, edited, and I'm going to be uploading them in a place where you guys will be having access to them. Share you get. Now, I was able to give general introduction about the forex markets. I took my time to give serious introduction. So after the introduction, I was able to talk on candlestick. I told you guys that the ABC of forex trading is understanding candlestick. The beginning of forex trading, like somebody that wants to start trading forex, just like a child who starts primary 1 or nursery 1. A is for apple of forex trading is candlesticks. And I told you the reason why is candlestick very important. It is very important because the only tool or the graphical representation of what is going on between buyers and sellers that you have access to is the candlesticks. And that is why I encourage you guys. The only way, or one of the ways you can show me that you are ready for forex, is for you to start reading this book on your own. For you to start reading this book on your own, for you to have this book, either hard copy or if you prefer soft copy, just make sure you have this book. Now today, I want to lay emphasis on different types of traders we have and the issue of time frame, because time frame is a very important concept in forex trading. Now, one of the things I want to mention is this: the type of time frame you operate on depends on the type of trader you are, right? In case you have questions, don't hesitate to call my attention to it. It is very important. Now, we have different types of traders. Remember, we just have 30 minutes in this class, so we should be able to make good use of the time we have. Yes, so I'm talking on types of traders, so that your understanding of different types of traders we have will also make you to know the type of trader you are, right? And then you know the type of time frames you should be operating within. So we have the type of traders that we call the scalpers. I'm still going to lay little emphasis on this. We have the type of traders we call the scalpers. We have the type of traders we call the swing traders. Swing. This is how to spell it. There are traders we call the swing traders, right? Then we have the type of traders we call day traders. We have the ones we call day traders. This way, day traders. And then we have the ones we call position traders. Position traders. Why do we have different types of traders? The reason why we have different types of traders is because when you open your MT5 or your MT4 or your trading view, you are going to see that we have different time frames. The type of trader you are will also affect or determine the type of time frames you should be operating within. Now, let us quickly talk about scalpers. I'm just going to make, these things are some things you are supposed to read up, right? But I'll just make few sentences about this type of trader so that you'll understand. Now, who is a scalper? A scalper is a forex trader that makes trading decisions within the lower time frames, right? Within the lower time frames. A scalper operates within the lower time frames such as 1 minute, 1 minute time frame, 2 minutes time frame, 3 minutes time frame, 4 minutes time frame, 5 minutes time frame. The highest a scalper can even go is 15 minutes time frame. Please don't be confused. I'm still going to lay emphasis on this. If you come to your trading view or your MC, this is trading view. If you come to your trading view, you are going to see that we have different time frames. You are going to see that we have different time frames. This is 1 minute time frame. And I told you in my previous class that if we switch the chart to 1 minute time frame, it means that all the candles you are seeing in that chart is showing what is going on between buyers and sellers in 1 minute time frame. I said this in our last class. I don't know who is there and who was not there, but of course you should know this is 1 minute time frame. This thing means that all the candles you are seeing here, the candle will open and close within 1 minute. And I brought this first chair in our last class to show you guys that if you place this first chair here, you are going to see that this candle was formed 2019, this one 2018. So each of the candles here is showing what is going on between buyers and sellers in 1 minute time frame. Then you have other time frames. You have 3 minutes, 5 minutes, 15 minutes, 30 minutes, 45 minutes. You now come to hours. You have 1 hour, 2 hours, 3 hours, 4 hours. Now, a scalper is an impatient trader. Let me use this word if it is the correct word. A scalper is a trader who doesn't have the patience. He lacks the ability to wait for trades to play out over a long period of time, right? A scalper usually opens trade and closes trade within minutes. So the time frames that a scalper operates within is between 1 minute time frame. Please pay your attention to this so that you understand. 1 minute time frame to 15 minutes time frame. Now, another factor you have to understand here is that every forex trader has 2 types of time frames. Every forex trader, whether you are a scalper or you are a day trader or you are a swing trader or you are even a position trader, you have 2 types of time frames. You have the time frame we call your entry time frame. Entry, the time frame where you enter your trade. This is the time frame where you place your buy. This entry time frame is the time frame where you place your buy. This entry time frame is the time frame where you place your stop loss. This entry time frame is the time frame where you place your TP, take profits. I want to assume you already know what stop loss and TP is, but I have a presentation that is designed to teach you some of the common terms you need to understand before you become a forex trader. I'm still going to have a class on that, right? I'll teach you that presentation so that you understand. So every forex trader must have 2 types of time frame. You must have entry time frame where you enter your trade, and you must have higher time frame, HTF, higher time frame, or the time frame for analysis time frame. I get it now. The time frame where you do your analysis. Let me repeat myself now because it is very important. Every forex trader, no matter the type of forex trader you are, you must have 2 types of time. You must have 2 time frames that you operate in. You must have your entry time frame, the time frame where you enter your trade, and you must have your higher time frame where you do your analysis. Now, why do you need higher time frame and entry time frame? Now, remember that a technical analyst, a forex trader, is somebody that has the ability to analyze the chart and use the past activities in the chart. You have to predict what has happened in the past and use what happened in the past to predict what will happen in the future, right? And for you to be able to predict with high level of accuracy what will happen in the future, you must do your prediction and analysis in the higher time frame. This higher time frame is where you want to see what the big guys are doing. This higher time frame is where you want to see the bigger picture of the market, right? So if you are a scalper, your higher time frame should be within 15 and 30 minutes. A scalper operates its higher time frame within 15 and 30 minutes, right? This is the higher time frame for a scalper. 15 minutes. This 15 minutes is where the scalper goes to check the trend of the market, because the scalper is a trader that just wants to take trade within minutes and close it. He doesn't have any business with 2 hours time frame, 1 hour time frame, daily time frame. He just wants to check the trend of the market from 15 minutes or 30 minutes time frame, then mark his support and resistance level, and then come to the lower time frame, which is his entry time frame, mostly 1 minute for him to take his trade. This is a scalper, right? Now, I'm still going to forget when I mention support and resistance and all those terms, we are still going to go there, right? But for now, the purpose of this class is for you to understand and also determine and write in your trading journal the type of trader you want to be. I, Dennis, your mentor, cannot force you to be a particular type of trader. The type of trader you want to be depends on your schedule. It depends on your availability. You understand? But a scalper usually doesn't have time to hold trade for 2 hours. A scalper don't hold trade for 2 hours, 3 hours, 4 hours. A scalper
hold trade for highest 15 minutes, 10 minutes, 5 minutes, and he must have closed his trade and has taken his profits. That is a scalper for you. There are different advantages and disadvantages of being a scalper, right? I won't go deep into that. These are things you read on your own. And I people send you a PDF and the notes on these things so that you'll be able to read them and understand. One of the disadvantages of being a scalper is that if you're a scalper, you must be on your charts during the period you are trading. You understand? A scalper doesn't open trade and start going to the market. A scalper cannot open trade and start going to the market, or open trade and leave your chart and start traveling. You want to be in the chart. You want to, because once you open in 1 minute, within 5 minutes, you close your trade and made your profit. So you must have the time to stay in your chart within the period you are trading. And also, as a scalper, you must be very fast in execution. A scalper is very fast in execution, right? But the disadvantage of being a scalper is that you must pass through what we call emotional roller coaster, because you have to be entering, buying, selling, buying, selling. A scalper can take up to 10 trades in a day, 20 trades in a day, depending on the time that he has, right? That is it about scalping. A lot. I will still lay emphasis on that when we continue and questions are coming. Then the next type of trader after scalper is day trader. Like, I am a day trader, and in fact 90% of traders are day traders. 90% or even 80%. I don't know the percentage, but I know that more traders are day traders than swing and scalping. So who is a day trader? A day trader is just a trader that opens and closes trade within 24 hours. This is the easiest. You know what a day is. A day is made up of 24 hours. So a day trader, most people that claim that they are day traders and they open trade on Monday and hold the trade till Wednesday, Monday to Wednesday, you are no more a day trader, you are now a swing trader. A day trader opens trade and closes trade within 24 hours. Right? This type of trader operates within, remember I told you that every trader must have entry time frame and higher time frame for analysis. So the entry time frame for a day trader is usually 15 minutes. Most day traders place their buy and sell in 15 minutes. Some day traders come as low as M5, 5 minutes to enter their trade. But they operate within 5 minutes and 15 minutes as their entry. This is where they place their buy or sell. This is where they place their stop loss. This is where they place their TP for day trader. And their analysis time frame, the analysis time frame or the higher time frame for a day trader is usually from 1 hour, right, to 4 hours time frame. Sometimes a day trader usually check daily time frame, but you are just checking daily time frame just to know what the candle for the day is, because the area you are interested in is today. You want to know what the trend of the market is for today. You want to know the direction of the market for the day, and then come to your entry time frame and then take your trades. This is how a day trader operates. So the higher time frame for day trader is from H1, H2, H3 to H4. Or even sometimes they will check the daily time frame to know what the candle for the day is doing. And then they will now come down to 5 minutes and 15 minutes to take trades in the direction of the trend they were able to identify in the higher time frame. Now, let me even give you a summary of what day traders do, because I'm a day trader myself. Look at what day traders do. Yes, what they do is this. A day trader will wake up in the morning. You wake up in the morning on Monday. Then you want to take trade today. You want to trade GBP USD today, and you are a day trader. That is why I like day trading. A day trader has more peace of mind than a scalper, right? A day trader can hold trade for 5 hours. A day trader can hold trade for 6 hours. A day trader can hold trade for 10 hours. A day trader can hold trade for 11 hours. You can open your trade and hold it for 20 hours, but you don't allow a trade to pass 24 hours. That is a day trader. All your trading decision is within 24 hours. Now, how do we do it? You just wake up in the morning, right? Determine the asset you want to trade, GBP/USD. You want to go to higher time frame to know what the overall trend of the market is. You want to go to higher time frame to know what the sentiment of the market is. You want to go to the higher time frame to know what the trend is, to mark out your areas of support and resistance. We are going to be teaching you all these things right now. We've not started. I'm just showing you. Once you go to a higher time frame and know what the trend of the market is, I'm going to teach you about the trend when we discuss market structure. and you find out that the trend of the market is bullish, or the market is buying, or the market is going up in the higher time frame, you now come to the lower time frame, which is your entry time frame, and look for entry opportunities, buying opportunities in direction of the trend you found out in higher time frame. I know that this is very clear. So that is why you must have higher time frame. You don't just, many traders do it, and this is why they lose money carelessly. Remember, I told you guys that this is a business where losses are compulsory. You must be having losses, but you have different types of losses. We have normal loss. You understand? There is a normal loss. Every strategy in the market must have loss that is accrued to it. This is a normal loss. But you have abnormal losses. I don't know whether to call this abnormal losses. Any loss you have as a result of carelessness is what you call abnormal losses. Eliminate abnormal losses. How can you call yourself a day trader? You are a forex trader. You just open your chart and you come to lower time frame like N5, 5 minutes, and you start buying without even going to the higher time frame like 4 hours or 1 hour to know what the overall trend of the market is. You want to go to the higher time frame to know what the sentiment of the market is. If you take what I'm telling you serious now, accumulation of this knowledge, when you apply them, is what will make you a very good technical analyst and a better trader. So what I'm doing is not a waste of time. So I want you to take it very seriously. So as a day trader, when you go to higher time frame, you get all the information you need to get about the market from the higher time frame. Then come to the lower time frame and trade in the direction of the information you got from the higher time frame. That is simply how to trade, and that is why you must have your entry time frame, and you must have your analysis time frame, which is your higher time frame. I believe that is clear for a day trader. We are still going to talk more on this later. Now, the next type of trader we have is the ones we call the swing traders, right? The swing traders. Yes, who is a swing trader? A swing trader is a trader that holds trade for days. Are you seeing that we moved from scalpers to day traders to swing traders? This young guy here, scalper, hold trade for minutes. This day trader hold trade for hours. Swing trader hold trade for days. A swing trader can open trade on XAU USD on Monday and hold it till what? Tuesday or even Wednesday. He's a swing trader. I get it now. A swing trader now, when it comes to having time to yourself, if you are someone that is really busy, you don't have time to be checking your charts every time, swing trading will be better for you. Lower time frame for swing trader is like 1 hour and even 4 hours. Their lower time frame, this is time frame where they enter their trade, where they enter their buy. This is time frame where they put their stop loss and take profit. Are you seeing the difference now? 1 hour and 4 hours is their lower time frame or their entry time frame. While their higher time frame, the time frame where they do their analysis, is something like daily time frame, weekly time frame. Are you getting it now? Week 1, weekly time frame, and even monthly time frame. They can even go as high as monthly time frame, because a swing trader can hold trade for 1 week. He's still a swing trader. So if you are such a person that has a busy schedule, you don't have the time to open your chart every minute. You are looking at the chart, every hour you are looking at the chart, every second you are looking at the chart, and you are even busy. Maybe you have a day job, right? And you work from morning till 6. You can just wake up, analyze the trend of the market for the week in weekly time frame, analyze the trend of the market for the month in monthly time frame, mark your areas of support and resistance, mark your areas of value, mark your point of interest. Don't even be confused. I'm going to be explaining all these things, right? So when you mark all these zones, you now wait for the market to approach your zone in your entry time frame, which is your 1 hour and 4 hours. Or even daily. Sometimes they even enter in daily time frame, and then they will enter their trade. When they enter their trade, they put their stop loss and take profit, and then zoom off, go to work, go and do other businesses, and then maybe after 3 days or 4 days, they will come and check their profits or their loss. This person has patience. For you to be this type of trader, you must have patience. You must be able to watch your profits, your trade move in profits, turn to loss, move in profit, play with your emotion. You must have high emotional stability if you want to be a swing trader. You must be patient enough. But remember that scalpers are not patient enough. A scalper will just want the market to move, pam, pam, pam. That's taking profit and he's out of the market. Next 5 minutes, he has seen another opportunity, he enters. A scalper can see up to 10 opportunities to buy in a day. A day trader cannot be trading like a day trader who takes 10 trades in a day is probably scalping. A swing trader might even take 1 trade in a month or even 2 trades in a month. A swing trader might even take 1 trade in the whole week, depending on the opportunity. I hope you understand it now. So you have to be patient. You don't just enter trade and rush to close it if you're a swing trader. I believe this is clear enough. We are still going to be attending to questions. Any other area that needs clarification, I got you guys, right? Then the last but not the least is the oga patapata of them all. I call these guys the big guys. These guys are not your mates. Position traders. In fact, these position traders, sometimes I even call them the investors. Number one, these guys have access to a large sum of trading capital. These guys can open trades January 2024 and hold that trade till March 2025. This guy is a position trader. March, and I'm writing Mark. Sorry for that. March. I get it now. So this guy is a big guy. He has access to a lot of money that can hold trades. He will analyze the trend in yearly time frame. Most of you don't even know that if you open your chart, we have 12 months time frame. This is 12 months time frame. That means one candle in this time frame represents what is going on in the chart for 1 year. So that you see that this forex no be your mate. If you are using MT5, we have time frames here. Yeah, this is time frames. Good. Then I come to MT5 even ended the monthly. MT5 ended the monthly, but TradingView will give you yearly, even more than yearly. You know that this monthly time frame means that one candle here represents what is going on in the chart for 1 month. Let me switch to GBP so that you see. Are you seeing? This is yearly time frame. This particular chart is showing you that throughout this year, we are going to see it. This is January 2024. Are you seeing January 2024? This is January 2023. Are you seeing that in 2024, GBP has been selling? Somebody will hold this trade for complete 1 year. Throughout last year, GBP bought. Last year, GBP sold. Are you getting it now? So this is yearly time frame. I just want to understand the significance of time frames so that you see that time frames are there for you depending on the type of trader that you are. The position trader analyzes the charts maybe in yearly time frame sell. Yeah, this way position trader analyzes the chart in yearly time frame or even 1 range time frame. You've seen it. You have 10 ranges. This is how far they are like investors. Some of these guys that will tell you that they bought Bitcoin since 2010 and they are holding it. These guys are position traders. BTC has the charts if you don't know. So Bitcoin traders want to trade Bitcoin. Even everything I'm going to be teaching you in this class, you are going to be applying it in any chart, whether it's Bitcoin or any other thing. So that's exactly it for that aspect. I've needed to show you different types of traders and different time frame, right? And then the type of time frame you operate in depends on the type of trader you are. Now the question is, which type of trader do you want to be? Which type of trader do you want to be? Do you want to be a scalper? Do you want to be a day trader? Do you want to be a swing trader? Or do you want to be a position trader? So the type of trader you are depends on your personality, and that is why trading is very difficult. You don't just join this market and then you want to do what your friend is doing. No, it doesn't work like that. Check your personality, check the type of person you are, check what works for you, and then work with what works for you. But personally, I'm a day trader. I like day trading. but that doesn't mean that day trading is the best. None of this type of trading method is the best. None of them is the best. It depends on you. It depends on the time you have. Now, moving away from there, we have about 9 minutes remaining. Let us dive into the next stuff that we have here, right? In our last class, I've been able to explain and describe the candlestick anatomy. I talked about the candlestick face. I talked about the candlestick body. I talked about the open price and the close prices of candles. Now, there's something I want to talk about right now. So when you see candlesticks like this, please pay serious attention. When you see a candlestick like this, because this will be the last time I might talk about candlestick, so that we move into market structure. This is a candlestick. This is another candlestick. This is another candlestick. All these candlesticks are all bullish candles. They are all bullish candles. This is also a candlestick. This is also a candlestick. This is also a candlestick. Right? All these are different candlesticks, different shapes. This is also a candlestick. This is also a candlestick. Good. This is also another candlestick. Good. It is not a waste of time. It is very important that we do this so that everybody will be on the same page. This is candlestick A. This is candlestick B. This is candlestick C. This is candlestick D. This is candlestick E. This is candlestick F. This is candlestick, let's call this one G. This is candlestick H. And this is candlestick I. So what is common among these candlesticks? These are candlesticks, different shapes you can see in the chart. I can't even draw all of them. There are millions of candlesticks in different shapes. And these candlesticks you are seeing here are carrying information about what is going on between buyers and sellers. Now, let's assume that this candle is now 4 hours candlestick. All these candles are brought from GBP USD, for example. GBP USD in 4 hours charts. GBP USD in 4 hours charts. I'm going to be brief with explaining this because it's also part of the assignment, but there's something else I want to talk about before it escapes my mind. This is 4 hours chart. All these candles took 4 hours to form and the asset is GBP USD, right? And you can see that all these candles are all bullish candles. They are all bullish candles. Now, candlestick A, what actually happened in candlestick A? When you see a candlestick like this, and this is 4 hours, what happened between buyers and sellers within these 4 hours? As was shown in this candlestick, we could see that the candle opened here and the candle closed here, right? And within these 4 hours, we saw that sellers pushed this market down up to this place, and then buyers came and rejected. This is a rejection candle. Buyers came and rejected sellers and pushed price up, and this is where it finally closed. This is a rejection candle. Most of the trading, a lot of trading activities took place outside the open and close price, and that was why you see this long break here. I see now, this is another candlestick B. It's also a bullish candle. It opened here and it's closed here. And look at how low sellers pushed the market down before buyers came, rejected the sellers, and the market closed up here, right? So trading activities took place outside the open and close price. This is the body, the open and close price. Then another candlestick. This candlestick is showing you, I know when you see a candlestick here with small body, the body of this candle is small and the candle has long wick, upper and lower wick. It shows that a lot of trading activities took place outside the open and close price. I see how the open and close price is really tight. The difference between the open and close price is very small. And it has long upper shadow and the long lower shadow. It shows that a lot of trading activities occurred outside the open and close price. This candle here is an indecision candle. We are going to see this type of candle when we start studying candlestick pattern. This is an indecision candle. The open and close price of this candle is equal. The candle opened and closed the same place, but before it closed, sellers pushed the market down here, buyers pushed it up here. So a lot of trading activities took place outside the open and close price. This is an indecision candle. When you see this type of candle in the chart and you are buying, it is a sign that you should start closing your trade. When you see this type of candle and you are selling, and you see this type of candle, it's an indecision candle. It's like a pause, an indecision in the market. You see that the open and close price is the same. This type of candle, candlestick E, is the doji candle. You are still going to study the candlestick pattern. This is a doji candle. The open and close price is the same or almost the same. But within that, you saw how sellers pushed the market up and buyers rejected the sellers. The power of the buyers were very strong to push the market from down here up to this place. This is a rejection candle. And when you see this type of candlestick, buyers are more likely to start pushing the market up. The opposite is this. This is also another doji candle. This one is called dragonfly doji, while this one is called gravestone doji. We're still going to be learning all these things in candlestick patterns when we start studying them, right? So all these candles you are seeing, if you see this candle here, candlestick G, this candle here has very big body. They say that the bullish momentum or the buying pressure in this particular candle is very high. Buyers were able to push price from here and push it up to this place, right? The buying pressure here, and most of the trading activities took place, or most of the trading activities were confined within the open and close price, and that is why the body of this candle is big and it has very small wick. So any candle you see in the chart, any candle I give you, you should be able to tell me the story that the candlestick is carrying. How do you start? You should be able to have some information at your disposal. Tell me that this particular candle was formed in 4 hours. Tell me that this candle is from GPUSD. Tell me that this particular candle is showing what has happened in GPUSD within 4 hours. Tell me how buyers and sellers were fighting and who won. Tell me how low sellers pushed the market down or how high buyers pushed the market up. All this is our knowledge. Knowledge in forex trading is key. Do not play with knowledge, right? And that is it. And we are already coming to the end of the class. We have 1 minute remaining. Guys, if you have any questions, you can unmute yourself and speak before we end it. Remember, I'm still going to be posting all this video from tomorrow or next tomorrow. I'll start posting the video and I'll start posting the assignments. Please, the assignments are very important. You need to do the assignment. Yes, I can hear you. Ask your question.
Okay, so my question is full swing traders.
Yes.
I mean, position traders that put trades for long as much as years. Does it mean like they make more money, or like is it like the higher you hold, the more money you make?
Yes. Let me answer that question. Please mute yourself. A position trader is looking for higher money. A position trader will be looking for something like 30,000 pips or higher. A position trader will make money from a single trade than a scalper. Scalpers are looking for small movements in the market. A position trader is looking for bigger movements. They make crazy amounts of money, they make bigger money, and they also need higher equity to be able to hold the market and wait patiently for the market to print.